The board of TI met yesterday and approved the financial results for the quarter ended 31st December 2023. The standalone results for the quarter, the revenue was at 1,898 crores as against 1,710 crores in the same period for previous year. The PBT before exceptional items and tax was at 210 crores as against 192 in the same period previous year. And ROIC annualized was at 54 as against 53 in the same period previous year. Free cash flow for the quarter was at 66 crores. Quick review of the businesses. Engineering, the revenue for the quarter was at 1,229 crores compared with 1,081 crores in the corresponding quarter. PBIT for the quarter was 153 as against 134 crores in the corresponding quarter in the previous year. For metal form business, the revenue for the quarter was at 392 compared with 371 in the corresponding quarter, and PBIT was at 47 against 42 in the corresponding quarter. For the mobility business, which is our bicycles business, the revenue for the quarter was at 147, which was lower than what we had last year, 174. And we had a loss of 8 crores as against a profit of 2 crores in the corresponding quarter of the previous year. So that business has been weaker for us. In terms of the other businesses, the revenue was 219 crores compared with 166 crores in the corresponding quarter, and PBIT was at 14 as against 12 in the previous quarter. For consolidated results, TI's consolidated revenue was at 4,197 crores for the quarter as against 3,643 in the previous year. The profit for the quarter was at 390 as against 418 in the corresponding quarter of the previous year. CG Power and Industrial Solutions registered a consolidated revenue of 1,979 crores as against 1,753 crores in the corresponding quarter of the previous year. And PBIT was at 260 for the quarter was at 264. PBT was at 264 as against 285. Shanti Gears, a subsidiary of the company in the gears business, registered a revenue of 126 crores for the quarter as against 115 in the corresponding, and profit was 24 as against 23 crores in the corresponding quarter of the previous year. Commenting on the results, Mr. M.A.M. Arunachalam, Chairman TI, said that TI continued its focus on cost reduction and operational efficiency through Kaizen. Company exhibited strong performance in top line and also in bottom line with a 14% growth in PAT, driven by the healthy performance from engineering and metal form product divisions. Our subsidiaries CG Power and Shanti Gear continued their strong performance, and TI's board has declared an interim dividend of rupees 2 per share for the financial year 2023-24. So I will stop with that, and we'll be happy to turn it over to you for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. The first question is from the line of Rohit from Invest Analysis Advisory LLP. Please go ahead. Rohit, your audio is not.
Hello. Am I audible?
Yes.
Okay. Good morning, sir. Congrats for the set of numbers. The question is on basically that EV sales that we are going to make. So we are going to sell some 5 to 10% stake. So can you please put some more clarity on this? What is the transaction? What kind of things is going to happen?
So you'll have to, I don't know if I understood the question. You said 5 to 10%? What is the question?
Actually, a sale is happening on our EV business side, right?
Sale of what?
EV business, valuation of $2 billion determined for the EV business stake?
No, we've not disclosed any valuation specifically for the EV business in which we've raised funds. Is that your question? Kind of what valuation have we raised at in the EV business?
So actually, I came across a news and article where you're talking about the selling some 5 to 10% stake in our EV business. So that is what I was talking about.
No, so I mean, basically we have raised funds already in the EV business, right? I don't know if you are saying that are we going to raise more funds in the EV business? Okay, and we may raise funds in the EV business from time to time, but if we raise funds, we will disclose that we've raised funds.
Okay. And can you provide a comprehensive breakdown or explanation for the CapEx incurred by the company this year across the segment?
No, you want CapEx by segment, is it?
Right.
Do you have that data? May I share it? Asking for TI. For TI, what is the CapEx? Maybe we'll get you that data. Once we get it. What is it?
220 crore we have spent so far in TI.
220 crore. Do you know how much we spent in engineering off of that?
Yeah.
So we spent 220 crores in TI. That is what year to date. And of which 160 crores was on our engineering business.
Hello. Hello.
Yes,
Hello.
we can hear you. Yes.
Okay. Yeah. So my next question is on the EV side. So basically, since last 3 to 4 quarters, I think we are reporting losses. So can you give the indicative timelines, like how many quarters for which we can expect the losses to continue in this segment?
No, I mean, we are not giving any guidance on when the losses will stem in EV because we're launching new products there. And that's a business. That's why we've raised money specifically into that business so that we don't have to fund it further from TI, right? And it is a business which will take a while to establish. And so we are focused on establishing that business. We've got 2 products out. And 2 more product platforms will be added this year.
Understood, sir. And on the medical business side, so how do you see the potential, particularly in this segment for next 2 to 3 years? Like, what are the tailwinds happening in the sector, or what are our own strategy to capitalize on those tailwinds?
Yeah, I think it's better, and I request the moderator also to suggest that, each person gets to ask 2 questions per round, right? Because we can't have multiple questions all from the same person. So my guidance is that, let's just come back. Why don't you come back in the queue after the other question?
Thank you, sir. I would request Mr. Rohit to please rejoin the queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. A reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Yeah, morning, sir. So for the EV business, you said that 2 launches obviously happened. Very recently, we saw your for the 3-wheeler business. We saw your TV ad being launched. I think on the net we saw that. If you can maybe talk about that a bit later, how the journey has been. There were some supply chain issues which you had referred to last call. So how that progress is happening and what sort of progress we should see in terms of launches in the northern part of the country as well.
Yeah, so Paul, do you want to talk to that and then I'll add anything?
Mr. K.K. Paul, I would request you to kindly unmute, sir.
Yeah, I think we are making some progress. on that vertical. So we are actually now in the process of expanding our dealer network across other geographies. That's the first point. Supply chain stabilization has occurred, and further work in progress is there. Production ramp-up is happening, and we are able to establish newer and newer milestones for ourselves. Customer interface issues are getting improved day by day. That's where we are at this journey in terms of the product to take new geographies. That's the first task that we'll be having now in terms of this. And the newer product offerings that Mr. Villayan referred to would follow in a periodic fashion, given the plans that we have. That's what we have at the moment.
Sure, sir.
And specifically, Anupam, so on the three-wheeler front, we've had good response in the south, right? In the southern markets, we launched in 4 states. We've had good response there. So now we started moving into the north, because the north and the east are where the major markets are. So we started adding dealerships there. So I think this quarter we'll start the process of adding the dealerships. We should start seeing traction from that next quarter. So this quarter, basically, we will see growth in the southern markets and an initial seeding in the northern markets. And then next quarter, we should see some growth in north and east as well, in addition to south. So I think at the end of this quarter, we'll end up with about 75 dealerships across the country. We're at about 40 at the end of last quarter. And the product, the supply chain issues, we're addressing as we go along. So for the most part, a lot of them will be addressed this quarter, and I think they'll be fully addressed by the end of next quarter. Because initially we did have some challenges with the charger supplies and reliability of the chargers in the market, but now most of that is getting addressed. So I'm actually fairly encouraged by the three-wheeler performance, right? So I think that performance is continuing to pick up fairly well. On the heavy truck side, basically we just started. So, usually what we're seeing as a sales cycle for the heavy truck is that basically, the customers first want to trial the truck. Then they buy, a small number of trucks, like 2 to 5, and then they start buying in larger quantities. So we've had one customer order of a larger size now, which is good. So delivery should start this quarter. And then, so I definitely think that traction is going to pick up on that product as well. So it's still early days, but, some of the accounts we've got on that product are very solid accounts that have a lot of potential. So I'm fairly optimistic that will start growing as well. And then on the other two products, like we said, we're in the process of homologating the tractor and the small commercial vehicle. So both of those products should hit market later this year. We're estimating around August, September timeframe.
Understand, sir. So second question was on the medical business, both CDMO and the Lotus numbers which you saw. So Lotus numbers, if we specifically see in this quarter, there was both a Q1Q decline as well as it was a loss at the EBIT level. So maybe some color on why that happened, and in terms of, let's say, next 1 year or over the next 2-3 years, over the medium term, how do you look to scale up the Lotus Surgical's business?
Anupam, thanks for the question. Lotus, we are basically investing into the future. A lot of investment is going towards building the sales team, as well as Europe getting some certification so that our exports can be enhanced. So this business just we took over, and we are investing into future. So in future, you will see pickup, but some quarters we surely need to invest for the future, and that's a strategy going forward.
So the EBIT.
And coming to the EBIT level, maybe this amortization of whatever intangible assets we paid it, as per Indus law, we have to amortize over a period of time. That's why able to see that negative, but which will be continuing for quarter to quarter. It is accounting policy.
Okay.
So the business is generating free cash, Anupam. It's just that it's only because of the amortization issue that you're seeing a negative EBIT there.
Understand. And CDMO, if I understand right, you were supposed to, I think, commission by the end of March. Is that on track for the tax benefits which you had initially thought about, and is that on track for that?
So Govind will give a quick update on CDMO.
Yeah. So the lab has been commissioned as far as billing before March. The kilo lab already we got the consent to establish, and next week we'll be applying for the consent to operate. By the time I think we'll be ready with the facility. As soon as that is made available, we have already developed a couple of products to go into that facility to do that commercialization in terms of the semi-commercialization from the kilo lab.
Okay. Understand, sir. I'll come back in the queue, sir. This is helpful. Thank you.
Thank you. A reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So what type of capex will be incurring for all this electric three-wheeler, this truck, and
So the total right now, the total capital employed in the businesses are right now. The total capital. Is this the total capital employed? Why don't you answer, Nathan? What are the total capital employed in the businesses, and how much are we going to incur over the next year?
Yeah, this is Mayappan here. We have incurred a capex of almost around 450 crores so far in that business. All businesses put together in TICMPL as well as its subsidiaries so far.
Would you repeat the figure, sir?
No, I'll tell you what. Just give us a couple minutes. We'll just check and we'll get back to you. Okay. We'll just get the number for you. Do you have any other questions?
No, sir. Thank you.
Okay.
Thank you.
Just give us we'll get the total capital employed and the future capex. Just give us
for all three electrical
platforms. Yeah, for all platforms. Yeah, we'll give you the answer for all 4 platforms. Just give us.
During call also? During call only, or should I write?
No, during call we'll give it to you. We'll give it to you. 1 second. You have it? Okay. Yeah, we'll give it to you in the call.
Thank you, sir.
Thank you. You may please press star and 1 to ask questions. The next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. My question is on EV.
Sorry to interrupt, Mr. Jalan. May we request you to kindly use your handset, please, to ask questions?
Am I audible now?
Yes, sir. Please proceed.
Yeah. So, thank you for the opportunity. My question was on EVs. We have launched this three-wheeler and tractors, and we are looking to launch three-wheeler and trucks and looking to tractors. Just wanted to understand what kind of capabilities have we built in-house in terms of R&D or in terms of designing critical EV components, right? Let's say a BMS or a battery pack or a motor controller. So just wanted to just trying to figure out what is the exact work and what kind of value proposition are we offering to customers. So it's from that perspective.
Yeah.
Thank you.
So, I think it's a good question. So currently we have about 250 people in R&D, right? And that is, for the product development. But you're also asking a good question in terms of what's happening in terms of motor controllers and kind of the actual component level development. So the way we're looking at this is that version 1.0 of most of the products are going out with components that are basically already available in the market today. What we're then doing is beginning to separate out a team that is focused on more R&D for version 2.0, which is when then we will start kind of getting a more an EV component architecture and an EV architecture overall that is more proprietary to what we are doing, right? So actually, basically, we're beginning to separate out our R&D teams. So we have one set of R&D focused on the current product and on vehicle integration, and one set of R&D focused on what the next generation will look like. Because currently, to take products to market, if you had to develop all of the components from scratch, it will take way too long. So basically, at the first level, the motors, all of them are being, some of them have been custom made for us, but they are being bought from third parties. The motors, the motor control units, the BMSs, the vehicle control units, and all of that. We're also beginning to set up battery packing capability so that we're able to pack here, though we will still continue to import the cells.
Sure, Vellayan, thanks for the answer. Just one follow-up here. So if we fast forward 3 years, right, if you can share some strategy as to what kind of R&D strength people you would be needing, and what would be your focus areas? Because as you rightly said, right, all components no company can design or manufacture themselves. So what is it that you would want to do differently, or basically want to focus on a proprietary basis so that our vehicle gives a much better performance compared to that of the peers or other models available in the market?
Yeah. So I think so it's a good question. See, actually, the proprietary components, effectively, kind of what is differentiated here is going to be, it's going to vary by segment, right? So if you take a three-wheeler, what you're going to differentiate is very different from a tractor versus a heavy truck versus a small commercial vehicle, right? But basically, what we're looking at is for each segment where we think the key differentiators are going to be. Definitely, in the long term, motors are going to be a very significant differentiator. And that is a capability that we will have to have, and develop, motors and motor control units. But beyond that, we're also fairly clear that we will not get into batteries at a cell level. We will continue to buy from outside at the cell level. Packing inside, I do think is going to become necessary over time. And therefore, the BMS capabilities also, from a software management perspective, will likely look at coming in-house over time. In terms of actual control units in the vehicles, telematics definitely is something that's going to get standardized, and we don't see a whole lot of proprietary need there in terms of the hardware. On the software side, telematics will require some proprietary development, which we've already assembled a team to start doing today. And then in terms of the other control units in the vehicle, they're going to be specific to which vehicle. Right? So some vehicles that are going to be more transmission intensive, you will require some proprietary capability there. But otherwise, if it doesn't, then it is going to be more third party. So I would say that that's going to so as the vehicles start evolving for the next generation, we're going to start taking first one or two key components and then take it forward from there.
Okay, thank you for the detailed answer.
Yeah, thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital.
Yeah, we can, before Jinesh's question, let's just give you the details on the capital.
Yeah. This is Mayapan here. This is regarding the question on the capital employed and the capex spent and to be spent in the TI Clean Mobility. If you see our results, we have mentioned the capital employed at 17 crores as a capital employed as on 31st of December 2023. This is because of the CCPS which arise in the business. Actually, if you consider that, then it will be something like 1,767 crores is the capital employed in all the business put together in TICMPL. And with respect to the another question on the capex spent so far, we have spent around 300 crores so far. That is till this year, and it will be 300 crores. And next year, we are planning to do almost around 460 crores for next financial year for all business put together in TICMPL.
Thank you, sir. Mr. Gandhi, you can proceed with your question now, please.
Yeah, thanks. Just to clarify, you said capital employed in the clean mobility business is 1,067 crores.
1,760 crores.
1,760 crores. Got it. Okay. My question pertains to the export side of the business for the standalone entity. How are we seeing trends there? Is export back to normal so far? And incrementally, are you seeing any headwinds, either from the Red Sea issue or otherwise?
Yeah, export is back to normal, but however, we little bit headwinds on this logistics issue, which according to us, it is a very, very temporary phenomena. But in terms of customer offtake, in terms of OEM product development, it is back to normal, and that we see as a growth area going forward for TII.
Okay. So, exports now in standalone would be what? About 17%-18% of revenues or still little lower?
It will be 15%.
15%. Okay. Secondly, on the railway business in the metal form side, so we were seeing some signs of tendering playing out in previous quarter. Have those actually now started to come after COVID? It was quite muted. Is that segment also normalizing?
Yes, tenders are coming back to the business, but we see one phenomena here, maybe the little bit, it is getting more competitive industry, and we have to wait and watch going forward how we are going to do it, and then we have to take steps how to do some cost cutting inside or do the development where margins are more. But tenders are back. Margins seems to be under pressure in the short term. We will take appropriate call depending on how it goes forward.
Okay. And yesterday's announcement of government of modernizing 40,000 bogies to Vande Bharat standards, that will be adding to the existing opportunity, or that may not be material for us?
That will be a silver lining, like what that we have to see 2 or 3 quarters going forward. If this 40,000 wagons gets implementation, there will be a big demand, and maybe it will be straight away adding to our top line.
Got it. Okay. So that's it from my side. Thank you.
Thanks, Ganesh.
Thank you. Before we take the next question, a reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Raj Shah from Marcellus Investment Managers. Please go ahead.
Am I audible?
Yes, sir.
So, thank you for the opportunity. My question was, as Velan mentioned about this R&D efforts that TI is taking. The question was, we recently acquired an entity called JM Auto. So it's a automotive R&D company. That is what public domain tells us. So just want to know how this acquired entity will help us in the R&D effort that we are undertaking.
Yeah, so Raj, actually, JM is leading the development of the small commercial vehicle. So currently, we're developing the first product there, which is a 3.5-ton small commercial vehicle. And that is being driven out of the JM facility. And we will develop 3 products on that small commercial vehicle platform. And all of them will be driven by JM initially. So that's what they are working on. So that will keep them focused on that effort for this year at least. And then they will get involved also and more integrated with our broader R&D effort.
Okay, got it. And another question was, as per our original strategy, we have ballpark a figure of 300 crores per platform. So, based on various platforms that we have undertaken, CE, MHCV, LCV, tractors. So, I just want to know, to get a picture, where incremental capex would be required to, I would say, to meet that 300 crore figure. Just to get a broad idea.
No, so is your question, how we're going to meet that figure, or is your question? So just to give you a sense.
Yeah. My question is, in which platforms incremental capex is going to happen? Capex as in investment is going to happen.
Beyond 300 crores? Or up to 300 crores? Yeah, so if you see what's happening, right? So first is like now the three-wheeler, both the factory is built and that product is. The 2 main areas we have is kind of good for our products, going research and development and products and the factory build out, right? So for three-wheeler, for the first product, which is the L5M, that's complete. The factory build out for all the products on that platform is complete. But there is still some more R&D required and therefore some more tooling also required on the two other products, the L5N and the E-Rig. On the second platform, which is a heavy commercial vehicle, the first version of the factory is built out. And again, the first product is out and we're developing a next set of products. So again, there's spend that's required on R&D, prototyping, and getting those other products homologated into market. And then once those products are out, we will also need to spend on expanding the factory. On the small commercial vehicle, we will be incurring tooling for the cabin and the factory build-out costs over this quarter and next. And tractor, the factory is 85% built out, but that will also require some more costs around homologation and factory build-out over the next 3 quarters.
Okay, this is helpful. I have a lot of questions. I will get back in the queue.
Thank you.
Thank you. We'll take the next question from the line of Rohit from Invest Analysis Advisory LLP. As the current participant is not answering, we'll move on to the next question, which is from the line of Saif Saurabh Gujjar from ICICI Prudential AMC. Please go ahead.
Yeah, thank you for the opportunity, sir. My first question is on the large diameter tubes we had been talking about. Any update on that? Any wins on that front, and what investment we are doing on that?
So that plant is doing pretty well, and like we shared in the previous calls, we are investing into that business. Capex is halfway through, and it is expected to complete by maybe second quarter of coming year. And trials are on whatever Capex we have completed. Already trials are going on, and we are in process of getting our product approved by the customers. That's the current status of that project.
Okay, and how is the competitive landscape in that side of the business? Because other people are also talking about investing in this business where they see money on the table. So how is that evolving?
You are right. Maybe let's say we are going the next phase of this investment where most of the material what we are expanding is getting currently imported, and there is a good headroom available for the exports market. So this capex is for capability development rather than only capacity enhancement, and we have taken care of that aspect.
No, but others investing,
yes, but they are existing in the existing capability.
Okay, so if they come on board, they will still be behind us in terms of the
overall project configuration.
Okay, I have one more question, but I will fall back into for the time.
I think you have one more you can ask, no problem.
Okay. So just on the capacity side, on the standalone business, talking about particularly engineering and the metal form business, so we make decent returns here, and the reason being is our plants are well depreciated. But for the incremental growth we are looking from what you have been mentioning, what type of investment would be required, and what asset turns normally incrementally we should see from this business?
So as I shared earlier, we have for next year also about 350 crores, and we are getting into new geographies within India, and we are investing into the newer capabilities with those capex what we have planned for existing business in metal formed as well as engineering business both.
So what I mean is, what is the current capacity utilization for these two divisions on the standalone?
Like as a philosophy of the company, we take calls on future expansion when we are running close to around 80 to 85%. So current utilization is around 85%, and we are building capacities for future because we see this year itself will come closer to 95 or so, and by the time capex also has a cycle time of around 12 to 15 months time. So we follow this curve and closely monitor this.
Yeah. Thanks a lot, sir, and all the best.
Thank you.
Thank you. We'll take the next question from the line of Abhishek from DSP. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, just in terms of we are beginning to see, a healthy recovery as far as two-wheeler is concerned. So how should one look at the engineering part of the division, because you have very high market shares there, and should operating leverage and your cost efficiencies show up in the margin? This was my question on the engineering part of the business.
Surely that is our attempt, like two-wheeler business is reviving it, but ultimately, like we have also over a period of time done the beautiful diversification between PV, HCV, and two-wheeler and the three-wheeler, that part of it. And two-wheeler business, because there our majority of the turnover comes to, if it is going to give a good growth cycle, surely our top line as well as bottom line should go up going forward.
Okay. And in terms of both door frame and the engineering division, any major new client addition that you have done? May not be in two-wheeler because there you already have higher market shares, but in the PV, any major client addition that you have done which can increase the revenue growth from here on?
Like ARS and team are trying to participate. Hyundai is going to come in the west, in the Gujarat plant. And we are maybe already submitting samples, but obviously it will take about another year or so from now, but that will be a customer acquisition in the PV market going forward in the west for the door frame business.
Okay. Okay, sir. Thank you so much for answering my questions. I'll fall back in the queue. Thank you so much.
Thank you. The next question is from the line of Rohit from Invest Analysis Advisory LLP. Please go ahead.
Hi, thanks for the opportunity again. Am I audible?
Yes, sir. Please proceed.
Yes, please.
Sir, continuing with my previous question only, like in the medical business. So basically, I want to understand the kind of tailwinds that are going on currently in the sector and how we are going to capitalize on them.
Like you're already aware, in particularly medical, the health sector, even the government is also focusing in our per capita health consumption in the countries pretty less as compared to even medium developed countries. And most of this medical and even in the CDMO side, it is mostly imported. And we are attempting that to do that import substitution as well as when the domestic market itself is going to grow in terms of health consumption per capita, that we want to participate. That's why our first move was in the sutures business, which we are trying to do whatever is getting used in entire operation theaters in terms of mesh, in terms of sutures, in terms of staplers. We are slowly expanding into that all categories of the OT as well as on the CDMO side, which is our 3X. Govind, you would like to say respond on that?
Yeah. So as far as 3X is concerned, there are recent clear observations that I think there is more traction towards India for biologics, but that will also help the small molecules because we are currently not in biologics. But I think the above effect is also expected on the small molecules. So we expect that to benefit 3X in the medium to long term.
Understood, sir. And sir, just for a clarification, like you mentioned raising of the fund for Tier Clean Mobility. So are we done with the raising of the funds or we're still looking for the raising of the funds?
So we will. So again, right? We will raise if. So I don't think we're necessarily done with the raising of the funds. We will raise one more round of funds. We said that before, and we continue to be in the process of raising one more round of funds.
So can you tell me like what will be the source of like it will be the equity or the debt?
Equity. Well, in the sense in some cases it comes in as CCPS, but it's so it'll either be CCPS or equity.
Amount is 1,000 crore, right?
Yeah, we've talked in that range, yes.
Okay. Thank you, sir. Thank you. All the best for that.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and 1 on the touchtone phone. We'll take the next question from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Yeah, so thanks for the opportunity again. Can you give some picture on cycles? Obviously, there is a weakness on the sales side, and I think that is driving your losses. But how do you look at this for the next, let's say, near term? Any actions we can take to stem the losses?
So Anupam, thanks for question. You are right, that business is going weak for us, but we have taken action to diversify that business in terms of participating exports. As you are aware, exports takes a little bit time for customer approval and we have to go through that process. But we are going to enhance our exports and we are also giving focus on other accessories business like spares and the fitness part of it. We are working on that and cost reduction initiatives are also being taken. So hopefully this business will start showing positive momentum. It's a question of 1 or 2 quarters.
Sure. Thanks for this. And sir, one question on sequential margins. If you look at every segment in the business, leave CG Power aside because you know the reasons there. But every segment, if you see Q on Q, there is a compression in margins, whether it is engineering, metal form, even Shanti Gears. So any specific reason that you saw in the what drove this, or that should reverse, or how do you look at the margins trajectory there?
Anupam, you see always Q3 after festival seasons are over and even exports customers also will go through the seasonality factor. Models also start getting changed in December. So you will see year on year this trend will be there, and so it's this quarter phenomena, and we should be back to the original margins. As a year whole and all, we don't see any drop in margin will happen for standalone business as well as Shanti Gears as well as CG Power.
Sure, sir. And just one last question. On the electronic side of it, any progress that we have seen beyond, so in the acquisition which you had done, what's the progress there? Any further acquisition which you should expect there near term, or how do you look at that?
So, Anupam, we are working on that. As of now, like we shared in the previous calls, it was a baby step in to participate the journey, but however, we are looking into more opportunities and we'll update based on the progress.
Sure, sir. Thanks.
Thank you. We'll take the next question from the line of Raj Shah from Marcellus Investment Managers. Please go ahead.
Yeah, thank you again. So my question was, if we take CFO, cash flow from operations for the standalone entity, F23 it was around 625 crores. If this year we expect it to be 750 crores. So I just want to know how standalone cash flows would be deployed. You have already announced around 220 crores of engineering greenfield capex. There is this 3x per investment that will be done. So I just want to get idea about annual deployment of standalone cash flows.
So as we shared in the previous calls, the company at standalone basis will generate a free cash flow of around 650 crores. But however, we are in the capex cycle, like we are doing investment in the engineering as well as metal formed business, as well as we are doing the investment in our subsidiaries also. So we'll see that maybe, let's say, we are monitoring as of now at net debt level, and we closely monitor that. And our investments will not go beyond 2 times free cash flow, which is about 650 crores. So we closely monitor that and take care of it.
So just to add on to what Mukesh said, so basically, we currently have net debt in the order of about 200 crores, right? So obviously the first part will go towards paying that down. And then, what we see is investment. So the core business, if the core business takes about 300 crores, then investments in some of these other businesses as they grow, such as 3X or on the CDMO, on the medical business, could be uses of funds, right? Kind of other areas, right? Could be the uses of funds for the rest.
Okay, that answers my question. Thank you very much.
Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi. Any update on the optic lens business? I mean, that business has not seen much scale up beyond the pilot scale. So how are we thinking about that?
Yeah, so I'd say that we've had a real challenge in that business getting the product approvals from the customers we're working with. So we're still focused. What we're learning is it's quite a technical product and quite we're still working with experts to basically get the products approved there. It's definitely been much slower than we wanted, Jinesh.
Okay. And second question on the fundraise on the EV business side, which you indicated. So would we really need funds in foreseeable futures given the recent fundraise and the total cash which we have on books for that business? So would this fundraise be in near future, or how do we think about this?
Yeah, we're in the process. Yes, it can be in the near future. Yes.
Okay, but do we really, is that business will need that kind of cash given the investments which we are planning? Already we are having a reasonable amount of cash on the books due to the recent round. That's it.
That's a business where, we don't want to be blindsided. See, in all businesses, and all the competitors in that business are all fairly strong competitors, right? So there we need to make sure that we are basically able to compete, on the front foot in all of those four businesses we get into. So we want to be conservative there and raise enough cash so we don't end up in a situation where, we have to be conservative for whatever reason, or be extremely defensive for whatever reason to conserve cash.
Got it. So it's more of having a war chest in place in case it's needed.
Exactly.
Great. Great. Thanks and all the best.
Thank you. Thanks so much.
Thank you. The next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Sir, any update on TMT bar business?
So we continue to do that business because it is a trading business, and as of now our focus remains in the south, and it will continue.
So is it scaling up to our expectations?
Yes, maybe we are careful in that business. We don't want to get into a situation where cash becomes a problem. So depending on, we are dealing with basically all project orders, and we want to be focused there rather than getting into retail segment. So we are moderating not to scale up too much, but as a trading, it will continue in our portfolio.
Okay, sir. Thank you.
Thank you. Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for the closing remarks. Over to you, sir.
Hey, I think a lot of the questions were around the clean mobility business. So like we said, we're quite optimistic there on the two platforms that we've launched. So that's on that front. On the core business, engineering, metal form continue to do well. And we do see that opportunity as the environment basically begins to pick up going into the next financial year. So overall, we're quite bullish going into the next financial year. Thank you.
Thank you very much, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of IIFL Securities Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.